got Sanjay Sinha, the founder of Citrus Advisors, joining us. Hi Sanjay, good afternoon. This is Nayantara. I know you don't like to talk stocks, but my question is very different to you. That look at the weightage that Reliance Industries has, the kind of vision that has been laid out by Mukesh Ambani for the digital business, the telecom business, the media business, how he plans to disrupt the e-commerce space. So tell me, will that have a ripple effect in the short term? Will we see fund managers, for example, rejig their portfolio, reduce their exposure maybe to the other media companies, or like they did earlier with telecom? Could that happen? Could that be a fallout? Could they rejig their portfolio to reduce exposure to other media companies and competitors in the digital space?
I think that is a possibility, because given the scale at which Reliance operates and given the fact that they have a fairly large fiber optic network already laid out, and in case they want to use that for a multimedia play in the media sector, I'm quite sure that the implications on the other media players will be more or less similar to the impact that the Jio rollout has had on the telecom players. That is one part. Second is that even if you look at the index, and most of the funds are benchmarked to one or other index, Reliance has a fairly large weight in the index also, and therefore not to have Reliance and have other players in the index could also have implications on the fund performance. So therefore I think the announcements today have an implication both on the current portfolios of the funds as well as the strategies that they are going to be adopting in terms of rejigging the portfolios, exiting or reducing the weights of some of the other sectoral plays in which Reliance now intends to get into.
Would that still hold true for telecom? We did see the volatile times that were there for Idea Cellular as well as Bharti Airtel since Jio disrupted the entire market. Now, of course, you will have Idea and Vodafone joining hands when the government gives the final approval, which we understand is at an advanced stage. But tell me, are fund managers still wary of the incumbents' stocks and an exposure to them?
So therefore, if the question is with specific reference to the telecom sector, I think one of the things which has happened over the last couple of quarters is the fact that the industry has now got consolidated between these three players. The pressure that we saw on pricing, that to a large extent has now settled down and has been absorbed by the three players who will be playing the key role in the sector. So if I think if you look at the telecom sector, maybe we have some more pain, but that pain is not going to be as long as what we have suffered over the last 2 years. I think over the next 3 to 6 months, we will probably see the sector bottom out, and we might just see an upswing in the outlook of this sector as we saw in the case of the pharmaceutical sector over the last 5-6 months.
Sanjay, hi, it's Karunya here as well, joining the conversation. Let's talk a bit about the IT space. That one is under considerable amount of pressure today, primarily, of course, because of a big boy, Infosys, which is cracking away in trade, but a lot of small caps as well are a bit under pressure. The earnings are about to kickstart next week, especially for the IT sector, which is the first in the line. What is the kind of view that you have for the IT space, given that, the currency depreciation has happened in the recent past? What kind of a benefit do you see? And even in terms of overall earnings visibility, how are you reading into this sector?
So therefore, given the heady run that we have seen in the sector over the last few months, I am not surprised that just before the results are going to be announced, there is certain amount of trepidation in terms of the stock prices. Going into the results of the IT companies in this quarter, I think there are 3-4 key things that we need to look out for. The first and the most significant factor will of course be the impact of currency on their results. And while on one side there could be some you can say advantages that we could get because of the currency depreciation, but to some extent this currency depreciation would get offset by the wage hike and the visa cost that has gone up in the case of companies. On the same side, I think the sectoral play of the orders that have been coming to the IT companies also is something which is significant. We have seen globally the BFSI sector beginning to now look up and if that is something that is going to be reflected in the commentary that is going to be coming from the IT companies, I think that is the second factor that we need to look out for. The third and more important factor is the amount of play that they are now going into as far as the digital forays are concerned. The leading companies have already shown that close to about 30% of their revenue now comes from the new digital plays. Whether that is something that is going to be cascading down to the other players in the sector, more particularly in the mid-cap entities of the sector, is the third significant factor that we need to look out for. So, these three factors need to be seen in the context of the fact that, the rally that happened in the IT stocks got triggered by the exceedingly good results that we saw in the last quarter. So, that optimism and momentum needs to be sustained with the earnings and the commentary in the results of this quarter, and only then can we have a very strong outlook on the sector for the next 12-24 months.
The other defensive play, which is pharma, what is it that makes you like this sector?
So I think this sector is coming out of a long period of despondency. One of course is the fact that the currency will have some positive play on the earnings of this sector. At the same time, if you look at the domestic sales growth, that is also now very strong. I think given the fact that if you compare this quarter results with the last year same quarter, there was a base effect of the GST that had also played upon the pharma companies. So on that low base, this year results will look very good. And the fact that the regulatory overhang that was acting negatively against the pharma companies has abated to a large extent over the last couple of weeks, and now you have many more, I would say, the positive news coming out from the regulatory front. So a combination of these three things, I think, makes the sector now look far more attractive than what it was, say, probably in the month of January.
Okay, thanks a lot for joining us with that. The Citrus Advisors with its outlook on